And I read an interesting piece from Jeffries from yesterday. Very, very big firm. And they interviewed Yat Siu. Hopefully I'm not destroying that name, S-I-U. He's co-founder, executive chairman of Animoca Brands. Remember that name if you haven't heard of it already. Okay, it's basically an investment company valued at $5.8 billion now. Private. They invested in over 170 blockchain-related companies with a focus on decentralized apps, gaming, NFTs, and the open metaverse. So this guy, Siu's been investing in technology gaming for over 30 years. Worked at Atari Germany. I didn't even know it was Atari Germany. But just saying the word Atari, if you're under 35, you probably haven't heard of Atari. That was the greatest invention ever for us, older generation. That was the introduction to games for most of us. But that was in 1990. But one of the smartest people you'll find in the industry, and the interview was fascinating. I love the interview because it wasn't this huge fluff piece. This is a guy that's investing 170 different companies within blockchain, everything that he's putting all his money in. Some of the best contacts, but he highlights that currently there are only 200, 300 million people that are involved in cryptocurrencies, less than 20 million people who actually own an NFT, whereas the internet today, there's close to 5 billion people using it. So he highlighted how the decentralized nature of Web 3.0 and digital assets in the form of NFTs will disrupt, hear me out guys, almost all existing internet business models as we go from a rental internet to ownership. Meaning, what we're all doing right now, which wasn't really the intention of the internet, just so happened that way, and laws are in place and politics are in place, but we all rent the internet right now. We don't own it. You got Facebook, Apple, Google, just YouTube. They own all of your property that you post on the internet. I mean, they're using our pictures, everything we post, as their property to market to advertisers. If they want to remove us from the internet, they can. It's like so many people got kicked off these social media platforms for stating things that were controversial 18 months ago, like Biden's laptop, data on West Maring, stats on how COVID has very little impact to people who are in shape under 40, especially children under 12, almost very, very little impact, where the flu will kill more people than COVID under 12. And people were reporting this, and doctors were reporting this, that, and you got kicked off the internet. That was 18 months ago. They were controversial. Now they're fact. And we're reporting this stuff. But you actually got kicked off the internet for citing something that was factual. Think about that for a minute. That's how much control they have. But you got 3 million people following you on YouTube, and you're making money in advertising dollars. You run your whole business on YouTube, and Alphabet, Google has the right to just shut you down whenever they want. A person could sit there and be like, you know what? I don't like you, and click a button, and you're gone. No questions asked, and nothing you can do about it. I mean, the president got kicked off, and there was nothing he could do about it with social media platforms. There's nothing you can do about it because they own it. So as for the timing for the metaverse and Web 3.0, as we go from rental to ownership, Siu believes that the rate of adoption is going to be faster than the rate at which we adopted smartphones. This is the metaverse already $1 trillion industry, and he believes inside of 2 years, we will see mass adoption. That's not a long time. You say, wait a minute, how could it be $1 trillion industry? And I thought about that for a second. But when you take Meta, Oculus, Roblox, Fortnite, Axie Infinity, decentralized software companies, the gaming industry, and all sales, yeah, I say you get there. But all of this coming together now in these virtual worlds, that's where you're getting the $1 trillion number from. Is how long or how big does he believe this market could be? He thinks it's going to hit tens of trillions of dollars in 24 months. And eventually the hundreds of trillions, think about that for a minute, as the existing large internet players will see their entire business models disrupted. I mean, look what we're seeing with Twitter right now. Free speech platforms. Look at Apple having control over Facebook and Snap at almost every internet company that relies on an app to track its customers, again, which is almost every large consumer tech company that markets to consumers. Apple has full control of that. Isn't that crazy? And you're saying trillions and trillions. That sounds like a crazy number. The largest tech companies that own the internet, Google, Facebook, Amazon, Microsoft, Apple, have close to $9 trillion in market cap. That's right now. It's 12, 13 at one time. A lot of these names have come down. Then he talks about the current problems with Web 2.0, what we're in now, where our data can be deleted because it's controlled, owned by data companies. where Facebook could delete our digital identity, our entire history, which means we don't exist anymore in a digital world. So that's why he thinks every single thing can end up on a blockchain as an NFT. Again, you can't think of NFTs as these crazy art pieces, and I understand a lot of it's bullshit, but it gives you access. It gives you the right, if it's subscription-based, that you're making royalties off it. If you have music, instead of going to Apple and everyone taking a cut and whatever it is, 10, 15% of the final number that you finally get, imagine getting not just a ton of money up front, but every time somebody plays that, it doesn't go through Apple, who collects a fee, or this person, or your agent, or everybody that collects a fee. It goes directly to you. That's happening right now, guys, right now. So you look at this piece and you say, well, it's Jeffries, $60 billion in assets under management. Just came out yesterday. But the Metaverse 3.0, then you had Goldman, Morgan Stanley, and Citi just published their reports on the Metaverse, valuing the market between $8 and $13 trillion. Collectively, these three guys have over $8 trillion in assets under management. If they truly believe the Metaverse will become an $8 trillion plus market, where do you think they're going to invest their clients' money? No surprise. NFT and Metaverse companies, which we're seeing today, where billions have been raised already in the first few months of this year. I brought this up over the past couple of, why am I trying, just like when I was pounding into your head, I love to say that because I love to repeat myself and say it, just like during COVID, where, guys, you need to sit on the sidelines right now. A couple weeks ago, special briefing saying, market's really terrible. It doesn't do me any justice. I sell financial newsletters based on equities. It doesn't do me any justice. But I'm telling you what the data is showing and what we're seeing. So why is this so important to you? Understand? Why am I pounding the table on this, just like I was telling you about protecting yourself and your portfolios and buying puts? I said that since November was a fundamental change in the marketplace when the Fed did a 180 and said, wow, we'll raise the rates very aggressively going forward because inflation is not all of a sudden transitory, which you told us for pretty close to 18 months before that. So why is this so important for you to understand? This is a massive, massive shift taking place, where the stock market over the past few years got to insane valuations. It was totally out of control. You have ESG companies, SPACs, growth companies being valued at whatever, $10, $20 billion valuations while they generated a few million in sales doing these road shows. I mean, SPACs got popular not because it's cool. It's because the venture capitalists and the people who create these, it gives them a quicker way to exit their positions after they pump the shit out of them to you, and then they can get into the next deal. Where IPOs, your lockup is going to be a little bit longer. Not only that, the time a company IPOs could be anywhere from 7 to 10 years. That's the liquidity period. A SPAC, the liquidity period is 2 to 3 months, 4 months maybe. Some of them right off the start. So you have these guys investing in early stage companies able to pump up the valuations through every means necessary. Social media, going on CNBC, we're the greatest thing in the world. This is the growth we're going to see over the next 10 years. We're doing $3 million in sales, but that's going to be $50 billion in 10 years from now with a discounted cash flow model. All this shit, because there's all free money in the system. That's the market. That's the stock market. And now, look at it today. A lot of this shit is crashing. The Fed plans to raise rates by, I have no idea. I mean, whatever percentage over the next 12 to 18 months in terms of timing, right? It could be 3% in 6 months. It could be 3% in 12 months or 3% in 18 months. But they have to raise the Fed fund rate to the tune of 3% based on when the 10-year is. Just no matter how they want to do it, since they are praying, absolutely praying, Powell's probably actually praying, saying, please, please, inflation, moderate, which is not going to moderate because China's closed. And you still have supply chain concerns. And oil prices are still relatively high. Even though they fell below 100, they're still much, much higher. And we still have a war going on with agriculture. It's impacting the agriculture. But yet, let me pray that it moderates. Doesn't matter how much you pray. You have to get to 3%. You can do it sooner. You could do it later. You could do it in 2 years. The longer you wait, the longer this is going to be dragged out. And the longer these companies are going to have incredibly uncertainty. Because while you're doing this, it means higher rates, less money flowing into innovative projects. It also means really tough conditions for private companies right now. I just spoke to someone who's really smart in this world, telling me how valuations have come down incredibly. Remember, these are companies that raise money. They'll do an A, C, then a Series A, B, C, D, E, F, whatever, before they go public. With SPACs, it allowed them to go public a lot quicker. That's off the table now. But these valuations of where they raised money and when they raise money are incredibly high to usually you raise money and say you raise money at 30 million, 50 million, then it's like 2, 3 billion, 5 billion. And you're going to come out like Rivian or Robinhood at a 30, 40, $50 billion valuation. Then the stock crashes and everybody gets nailed except for the insiders who sold out. We saw it Chamath with Virgin Galactic. Sold out. He's not in it anymore. Everyone's going to space. Everything's cool. Same with Branson. They made a ton of money off of it. Good for them. But if you're looking at the private markets right now, man, and the valuations, think about it. The valuations as these people came in the last rounds, these private companies are valued 30% less. So they're not IPOing anytime soon. Now they're going to have that money locked up for a very long time. That means less liquidity into the marketplace. So instead, what are they going to do? Well, they're going to try to fit those valuations, maybe try to build revenue as a private company and earnings, hopefully come out during better macro conditions where the Fed is not about to aggressively raise rates and go crazy and tighten by its fastest pace in more than 30 years, maybe. So now the venture capital, private equity, what are they doing? Moving into the next thing. Metaverse 3.0. And not because they believe, well, obviously they believe they're going to make money off of it, but it's more deeper than that. It's because they have to. Since Web 3.0 will disrupt not just every single internet company, which we see who owns the internet, and that's going to change, but the entire financial system. Because you look at direct ownership of your digital assets, it's going to replace all those third parties who love bang you right in the you-know-what with massive fees. That's what they do. These massive fees. We know a bunch of people. You want to raise money? Let's bring it together. Give us 3%, give us 6%, give us whatever. It's all about fees. Remember, Goldman tried to shove WeWork down our throats at $40, $50 billion valuation. What is it? Like $4 billion? It went, of course, to a SPAC. So people got to look at the S1. It's all about fees and how they can generate money. It wasn't like, hey, WeWork is the greatest company. We're going to hold it long term. No, they don't hold this shit long term. You think these companies are SPAC? They're holding. You're the ones that are holding it long term, getting wrecked. They're out already. They're gone. They bought their island and hanging out and all that shit. That's what they're doing. It's easy to do when you have easy money policies and the Fed just, throwing money out of a helicopter to everyone. Not to the banks like in 2008, but to everyone. So as investors, you have two choices. Adapt to the new world of ownership, permissionless decentralization that gives you control of your digital assets on the internet, or die. I mean, slow or fast, you choose. As you wait for inflation to be tame, we hope. We have the Federal Reserve saying, we hope. Think about that for a minute. We hope the smartest people that we hired to make sure that we have growth in the economy, control inflation, everything's right. They're like, we hope. You hope? Are you crazy? Hope is not a good word. Hope is uncertainty, and uncertainty crushes stocks, which we're seeing now. And the Fed has no idea what they're doing. We all know that right now. We're only at 0.25% on a Fed funds rate. We have to get 3%. Again, people on TV are like, well, the Fed's not going to be that aggressive. They could choose whatever they want. They could be aggressive, they got to get 3%. You can do it aggressively, not aggressive. They got to get the 3%. Whatever. And you could highlight and say, wow, they're not aggressive, and we'll see the market rally like we saw like a couple weeks ago, rally a little bit, and then you're going to see all this happen again. Because they have to raise rates and money's coming out of the system. So slow or fast, that up to you. But the time this happens and when they're going through this, it's not really going to matter. The major shift will take place. It's inevitable. It's why the smartest early stage investors on the planet, people have been doing this for 30, 40 years, are investing billions into the metaverse and Web 3.0 right now. It's the future. It's your chance to own the next generation of the Microsofts, Googles, Amazons, Teslas in the pennies. Think about that.